Welcome to GRE. I'm your host, Keith Weinhold. Why does Bitcoin have any value? And why is a real estate show dedicating one episode to this topic now? The benefits and criticisms of the world's largest cryptocurrency, Bitcoin, today on Get Rich Education. If you like the Get Rich Education podcast, you're going to love our Don't Quit Your Daydream newsletter. No AI here. I write every word of the letter myself. It wires your mind for wealth. It helps you make money in your sleep and updates you on vital real estate investing trends. It's free. Sign up at getricheducation.com/letter. It's real content that makes a real difference in your life, spiced with a dash of humor. Rather than living below your means, learn how to grow your means. Right now, you can also easily get the letter by texting GRE to 66866. Text GRE to 66866.
You're listening to the show that has created more financial freedom than nearly any show in the world. This is Get Rich Education.
Welcome to GRE from Quito, Ecuador, where I am today, to the Mosquito Coast, Nicaragua, and across 188 nations worldwide. You're listening to one of the United States' longest running and most listened to shows on real estate investing. I'm your host, Keith Weinhold. Yes, we're a real estate show, but with 488 episodes, it's time to focus at least one of them, finally, on Bitcoin. We'll bring it back to U.S. real estate next week. Now, this is for a few reasons today. Bitcoin is largely misunderstood. It's become so big that it's hard to ignore. And there are two recent Bitcoin events, two happenings with global impact that makes now the right time to cover this. Now, look, I think that it's human nature that when you learn about something new for the first time and you don't understand how it works, like Bitcoin, it's sort of innate to start criticizing it or sort of discount it in your mind, chiefly because you don't understand it. Though Bitcoin's pseudonymous creator, Satoshi Nakamoto, wrote the Bitcoin paper in 2008 and the first Bitcoin was issued in 2009. And, you know, when I first heard about it sometime after that, I probably discounted it in my mind as well. And I think most people that don't understand Bitcoin, you know, they first think something like, oh, come on, what is this? Just magic internet money? How does that work? How could that have any value? And I think as one matures, when encountering the unknown, they inquire rather than criticize. And look, now, and I'm getting really personal here, aren't I? I don't do drugs, and I never have, but I don't criticize those that do drugs because it's a world that I just don't understand at all. Last year, I was having dinner with a couple. They asked me what book I'm currently reading, and I told them that it's a 350-page book about Bitcoin, and their response was laughter, sort of dismissing it. And they said, oh, how could anyone write that many pages about Bitcoin? Just completely discounting the whole thing. Well, for me, a turning point on Bitcoin is when I found highly intelligent people that understood it well, and they were excited about it, and they endorsed it. Now, real estate has more intrinsic value than the dollar, or gold, or Bitcoin, because real estate is essential to your survival. You can make arguments that the dollar, gold, and Bitcoin all have questionable backing, but today enough people agree that the dollar, gold, and Bitcoin all have value. People are agreeing. All three, gold, the dollar, and Bitcoin, have varying levels then of anthropogenic faith. Today, you and I, we live in a digital world that's comprised of 195 world nations. Well, then, shouldn't money be made of something that's digital and doesn't know any national borders? Think of Bitcoin's value proposition this way. You cannot move dollars across time. That's due to inflation. You can't move gold across space. That's due to weight and security. But consider this, Bitcoin can be efficiently moved across both space and time. Its supply is absolutely fixed at 21 million. There can never be more than 21 million Bitcoin either. It's traded on the blockchain, which is basically a digital ledger, but not every intelligent or influential finance person believes in Bitcoin. Of course, not every one of them. For example, it gets a little heated here. From last month, this is one of the most powerful men in the world, JP Morgan Chase CEO Jamie Dimon. He's getting annoyed about CNBC asking him about Bitcoin just entirely too often.
What do you make of the other firms, the BlackRocks of the world that obviously, and Larry Fink changed his view of this, obviously. Yeah. And maybe he changed his view because you think he genuinely believes in Bitcoin or believed it because he thinks that there's a marketplace for it and he wants to be part of that market. But what do you think of there's about a dozen big financial companies, Fidelity included.
Number one, I don't care. So just please stop talking about this and I don't know what he would say about blockchain versus currencies that do something versus Bitcoin that does nothing. And maybe that's not different than me. But, this is what makes a market. People have opinions. This is the last time I'm ever going to state my opinion.
Gold really didn't do anything either.
Yeah, but gold's limited in supply.
So is Bitcoin.
And it's been used. So you think so, huh?
I do.
I think there's a good chance that when we get to that 20 million Bitcoins.
They go to 42?
No, that Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
I think, man.
How the hell do you know it's going to stop at 21? I've never met one person who told me they know for a fact. They take that
mathematically, it can't happen because by the last one will be mined in 2150, and it gets harder and harder every time there's another halving. But Jamie, looking back over,
you guys do what you want, I'll do what I want.
As for gold, you can the 6 characteristics that make gold valuable for 4,000 years. They're all present in Bitcoin. That's all I'll say. And I love you, and I don't want to. And I also don't want to be a.
Joe, you may be right.
Yeah.
I don't own gold either, so okay.
That's what I mean.
Couple of quick final questions.
I like to own things that pay me incomes. It doesn't cost money to carry. Anyway, and it costs money to carry Bitcoin too, by the way.
That was Jamie Dimon. Now, governments and banksters like Jamie Dimon, they often dislike Bitcoin because it cuts out the use of their chief product, the dollar. So governments are especially hesitant to want to promote Bitcoin, a lot of them in the world anyway. I've got a conversation with a Bitcoin expert coming up. We're going to talk about its value proposition and then the criticisms. Yes, I'm in Quito today. I was last here in Ecuador 2 years ago, this Colorado-sized nation of 18 million people. I plan to attempt climbing to the summit of a 20,000-foot mountain later in the week. As for today, let's continue with why should Bitcoin have any value? Today's guest is the founder of The Financial Underground, and he is the editor-in-chief of that publication. He's a renowned international investor, and he specializes in identifying big-picture geopolitical and economic trends ahead of the crowd, and you've seen him featured seemingly in everything from Forbes to the Ron Paul Liberty Report. He was a speaker at the well-known New Orleans Investment Conference as well. Hey, it's great to welcome on to GRE, Nick Giambruno.
Hey, Keith, great to be with you.
Nick, I think a lot of our listeners, our real estate investors, are going to be wondering, now, why are you talking about Bitcoin on a real estate show? Actually, I think there are a few more commonalities here than what a lot of people think. What do real estate and Bitcoin have in common? They're both scarce, neither can be easily diluted, and they both take real-world resources to produce more of. You could apply those same 3 attributes to gold. So real estate, gold, and Bitcoin, they have this scarcity. And really, I think that's a wise investing theme. Go ahead and invest in what's scarce, limit what's abundant, and takes 0 cost to produce, like dollars. So really, that's the commonality between real estate and Bitcoin. But on a real estate show, I think we have a lot of listeners that just don't have an overall common understanding, Nick, of just what is Bitcoin and why does it have any value in the first place?
Well, that is some very good observations and a very profound question. What is Bitcoin? Well, Bitcoin is a relatively new asset. However, it has been decades in the making. People don't understand that Bitcoin didn't just fall out of the sky or is some kind of accident in some mad scientist's garage. This is something that has been in the works basically since the late 70s. And it came out of the cypherpunk movement. Now, you may have heard of these people, you may have not. The cypherpunks are basically, I find them as the good guys. They are involved in creating technologies that empower the individual and disempower the state. They are behind some of the most prominent freedom-oriented technologies that you and I may take for granted, including encryption. And that's another story in and of itself. Let me just briefly get into that, because that's what puts the cryptography in cryptocurrency. Cryptography is a very important field. It's basically the method of encoding information so that only the recipient can see it. And it's very important to understand that while we take for granted the average person has access to unbreakable cryptography today, that was not always the case. Cryptography has been around since the time of the ancient Greeks and maybe even before, but it's always been a government monopoly until very recently, in terms of historical standards, when cryptography was made available to the average person. That is a very profound thing, because now the average person can secure their information and secure their online life in a way that nobody can break. The US government can't break it. Chinese government can't break it. Nobody can break it. And that is very important. And that laid the foundation for Bitcoin. So what is Bitcoin? It's just, to sum it up, it is a superior alternative to central banking. And that is a very revolutionary thing. It basically does the job of what a central bank does, but much, much, much better, and removes all of the corruption, all of the nastiness that goes along with central banking. So what we have here is a genuine, workable alternative to central banking. And we can get into the details of that, but if you want to look at it, what it is, that's what it is. And at the same time, it's a form of money that is not just resistant to debasement, it's totally resistant to debasement. You talked about gold and real estate. Well, gold, what made gold money over thousands of years? Yes, it is scarce. However, I always like to use this example. There's a concept that's related to scarcity, but it's not that it was scarce. And the reason is think about platinum and palladium. There's actually scarcer than gold. Like, there are fewer ounces of platinum and palladium in the world than there are gold ounces. So why don't people use platinum and palladium as money? It's a very, very important point. The reason is because the platinum and palladium supply is not resistant to debasement. So it's scarcer, but it's not resistant to debasement. What does that mean? It means the annual supply growth of platinum and palladium are basically equal to the stockpiles. So depending on what this year's or next year's annual production of platinum or palladium are going to be, it can wildly swing the market. That is not true of gold. Gold is only about 1.5% growth per year, and that's very, very consistent. What does that mean? That is a very important concept. So the gold supply only grows at about 1.5% per year.
And this is basically an inflation rate.
Yes, it is. It's inflation rate, but it's very small, and nobody can really change that. Think about it. There's a bounty. It's not as if people don't want to increase the gold supply. They would love to. The way that the gold is distributed in the world and the cost it takes to mining, it puts a really hard limit on what you can produce each year. So that's what makes it a good store of value. And if something is not a good store of value, it's not going to be a good money. These are some very, very fundamental concepts I'm talking about, because they also apply to Bitcoin.
Now, when someone asks me what Bitcoin is, to give it a really short definition, I call Bitcoin a global digital currency that's decentralized. And you brought up the decentralization. That's really important. That's where I can make a peer-to-peer payment without having to go through an intermediary, where I can send my Bitcoin directly over to Nick. There was no bank involved in that transaction, for example, the decentralization of Bitcoin. But we talk more about why Bitcoin has value. I believe you began touching on it there, Nick. Bitcoin has this hardness, which is a strange term to people because Bitcoin is digital. So can you tell us more about Bitcoin's value that comes through its hardness?
Let me just touch on a quick point you made also. So simply put, the value proposition of Bitcoin is that it allows anybody anywhere in the world to send and receive value without depending on any third party. At the same time, it's a form of money that is 100% resistant to debasement. That's its value proposition. That's a very profound thing. So going to the hardness, yes, hardness is a concept that a lot of people get confused. Look, I love gold. I own gold. I recommend gold.
Same.
From the gold community. And I know the gold community. So I think a lot of people in the gold community get confused around this, around hardness. Now they think it's hard, like physically hard, like a piece of metal. That's not what hard means. Hard, and in terms of a hard asset, what it means is hard to produce. That's what it means.
Yeah.
That's what a hard asset is. It's hard to produce. And what is the opposite of that? Something that's easy to produce. Nobody would want to store their value, store their savings, store their economic energy into something that somebody else can make with no effort. Almost like, let's put our life savings in arcade tokens or frequent flyer miles. It's ridiculous when you think of it in that way. But that is, in my humble opinion, the most important attribute of money, is that it's hard to produce. All the other attributes of money, quite frankly, are meaningless if the money is not hard to produce. Because if it's not hard to produce, none of the other stuff matters. And that's the most crucial attribute of money.
Yes, reinforcing why we have that investing theme of invest in something that's scarce and difficult to produce and takes real world resources to produce, much like real estate does, much like gold with all the mining and assaying, and much like Bitcoin, because to produce new Bitcoin, it takes electricity, it takes hardware, and it takes software, some real world resources in order to produce Bitcoin. When we talk about the production rate or the inflation rate, Nick, in just a couple months here, we're coming up on something really interesting, which is really one reason why I have you on the show talking about Bitcoin now, and that is the halving event. The halving being that rate of new Bitcoin issuance is cut in half every 4 years. So tell us more about that and bring the stock to flow ratio into the conversation here.
We're at a cusp of a very important moment in monetary history because you can quantify the hardness of an asset. It is quantifiable. It is basically the inverse of the supply growth. And there's another way of saying that, as you mentioned, the stock to flow ratio. Basically, in short, you got the stockpiles. That's what's available. And then you have the flow, which is like the new supply. So the higher the stock to flow, the harder the asset is and the more resistant to debasement it is. And same thing when you take the supply growth, you want a smaller supply growth. It's just the inverse of the stock to flow. So gold has always been mankind's hardest money for thousands of years. And gold's stock to flow ratio is about, I think it's around 60, which means it takes about 60 years of current production to equal current supplies. If you look at silver, it's much less than gold, and every other commodity is closer to 1, which means that every year the new production basically equals the existing stockpiles. And that's not a very good attribute for something that you want to have as a store of value. Now, what is going to happen in this halving that's coming up in around April of this year? You can quantify the stock to flow. I just told you how to quantify it. So right now, Bitcoin and gold have about equal stock to flow ratios and about equal hardness. However, a key feature of the Bitcoin protocol is that every 4 years, the new Bitcoin supply issuance gets cut in half until around the year 2140 when it just goes to zero. So Bitcoin is not only going to exceed gold's hardness in a few months, it's going to double it. Now that is a very interesting moment in monetary history because mankind has not had a harder money than gold, I don't think ever. So this is all going to be very important, and it's coming very soon in April. Late April, I think, is when it's going to happen. So a very important moment in monetary history.
There is real profundity there with the stock to flow ratio of Bitcoin exceeding that of gold with the upcoming halving. And if you, the listener, are still hung up on the stock to flow ratio, we're talking about the ratio of the existing stock, how much of this stuff already exists, whether it's real estate or gold or Bitcoin, divided by the rate of new issuance. So the higher the stock to flow ratio an asset has, the greater hardness it has. And currently 900 new Bitcoins per day are being produced. And the halving means just what it sounds like. In April, that will drop to 450 new Bitcoins being mined into existence each day. So really, you can think of Bitcoin as being disinflationary. It will continue to inflate until the year 2140, like Nick described. That's when new Bitcoin will cease to be mined. And until that point, the new amount, the flow, continues to get halved every 4 years. There will only ever be 21 million Bitcoin that exist, and 19.6 million of those have already been mined. So you can get an idea of the hardness and how this helps supply the value of Bitcoin.
Well, absolutely. And he talks about that. I think it's something like 93% of the Bitcoin supply has already been mined. and the remaining 7% are going to come online over the next 120 years or so. You might want to get some before other people figure this out. There is definitely not enough Bitcoin for every millionaire to have one Bitcoin. It's far less. I think there's something, maybe 50 million millionaires in the world, probably more. They can't all have a Bitcoin. It's a very tight supply, and we have a situation here too that is related, because Bitcoin is the only asset, the only commodity where higher prices cannot induce more supply. If gold went to 10,000, you can be sure there are going to be more gold miners getting into the business, more economic deposits being found and exploited, and more supply eventually coming onto the market.
Great point.
And that same is true for every commodity. Gold is just the most resistant to that process. However, Bitcoin, no matter how high the price goes, it cannot induce the production of more Bitcoin. That's a very unique scarcity attribute that I don't think people really appreciate very much. It's certainly there.
So this upcoming halving event is one reason why I'm having Nick on the show now to do our first ever Bitcoin episode in almost 500 episodes. And the other reason is the nascency of the SEC approving a new spot Bitcoin ETF. And all that basically means is it helps give everyday investors really easy access to Bitcoin without having to set up a crypto wallet. And bam, hey, your mom can become a crypto bro now.
It is certainly a milestone in acceptance. I think it signifies that Bitcoin is no longer fringe. It's here to stay. It took over 10 years for the SEC to approve one of these things. I think the Winklevoss twins applied over 10 years ago for the first Bitcoin ETF. So they reluctantly did it. I don't think they wanted to do it. I think they lost a couple of key court cases that kind of forced their hand, but they did approve it. I frankly don't recommend the ETFs. It's not really Bitcoin, because what you have is a Bitcoin IOU, several Bitcoin IOUs. So let's say you buy the BlackRock Bitcoin ETF. Well, you have an IOU from your broker for the BlackRock ETF share, and the broker has an IOU from BlackRock, and then BlackRock has an IOU from Coinbase, which actually holds the Bitcoin. So I always tell people, look, it's a spectrum. If you want to take that trade-off, and you're taking a trade-off for convenience over security and sovereignty, if you want to take that trade-off, that's go right ahead. But have your eyes wide open and be conscious of the trade-off that you're making. I always prefer to tell people Bitcoin is unique. This is a bearer asset. People forget about bearer assets. Bearer assets are a very good thing. They give the people who hold them ownership over them. I think people who are interested in sovereignty, one thing too that's very important is that even if the Bitcoin price stays flat forever, it doesn't go up at all, it still offers people tremendous value, as what we were talking about before. Even if it stays flat and doesn't go up ever again, it still offers anybody anywhere in the world the ability to send and receive value from anybody else anywhere in the world, and to hold money that's resistant to debasement. That's hugely valuable, even if the price doesn't go up. And you can only get those benefits if you hold Bitcoin properly in your own Bitcoin wallet, where you control the keys, and only you control the keys, because that's who has ownership to this Bitcoin, is by who controls those private keys. You can just kind of think of that like the password to your Bitcoin. So that's what you want to do. If you can learn how to drive a car, you can learn how to self-custody Bitcoin.
I love what you did there, Nick, because what you helped us do is you helped us transition from talking about Bitcoin as an investment asset to using Bitcoin as a currency, if you wish to use it to transfer value. Really, Nick, I think a lot of people in the United States, one reason that they're not that interested in Bitcoin is because our currency, our United States dollar, it sure has problems. It sure recently went through a big wave of inflation, but our currency just is not as bad as some of these worthless pieces of paper have been in the Argentine currency, or in Turkey, or in Iran, or Haiti. So maybe Americans don't have enough of a reason to want to go ahead and get a currency that holds its value. So what are your thoughts with what people in other nations are doing, including El Salvador, where they made it legal tender, versus the United States, where we have this dollar that's being debased, but just not quite at the rate of most other world nations?
That's a good point. I see this in my travels around the world. It may seem like an advantage for the Americans, but I think it's a disadvantage, because they're going to catch on to this last, because they're going to have, oh, we've got the dollar is great, so why do I need to look at other alternatives? And they're going to be the last people. So I think what you could see over the next few years, and certainly over the longer term, is that countries like El Salvador, the countries that are experiencing the highest rates of inflation now and are thus more motivated to look at a superior form of money like Bitcoin or gold, but a lot of them are going to Bitcoin. These are going to be the countries that might fare better over the long term because they're going to be relatively early adopters in this superior monetary technology. Nobody takes a horse and buggy from New York to California anymore. No, you don't need to because you have airplanes, you have cars, superior technologies for transportation. And likewise, we now have a superior technology for money, which is to say storing and exchanging value. That's all money is. People think it's all confusing. You need a PhD and there's all these charts and confusing jargon. Money is not confusing. It's actually intuitive and anybody in the world can understand it. It's just something that stores and exchanges value. It's really quite simple. So now we have a superior technology for storing and exchanging value. And I think people who adopt it first are going to reap the most benefits. There are a lot of Americans who have adopted it, but they have been spoiled by the fact that the dollar has been the world's reserve currency. Now, I think that's going away. That's a whole other story. I think that's the two big reasons why, you shouldn't just depend on the dollar. One, we can talk, this is a whole new discussion about the dollar as the world reserve currency. I think it's going away. But now, despite that, we also have a superior alternative with Bitcoin. So, yeah, I think the people who are going to adopt this technology sooner are going to reap the most benefits.
Well, Nick, in your opinion, is Bitcoin's takeover inevitable, and how does that look?
I don't think anything's inevitable. I think it's a good bet. I mean, if I thought it was inevitable, I would sell everything and buy it. I have a more diversified portfolio, but I have a strong conviction in it, very strong conviction in it. But nothing is certain. Nothing's 100%. So I never tell people, and I'm not giving anybody any investment advice. I'm not a registered investment advisor or anything like that. So, but in any case, even if I was, I wouldn't tell anybody to go all in on anything. And that's certainly not how I manage my risk. However, I do have a very high conviction in it. And I think as it stands now, it has an excellent chance at gaining huge market share in the market for money. And people don't think of money as a market like a real estate market or a technology market or the market for any industry. But money is a market. It's probably the biggest market. And I think Bitcoin is, and to put it into perspective, the market cap of all the gold in the entire world is about $13.7 trillion. The market cap for all Bitcoin in the world, last I checked, is around $850 billion. So we're less than 10% of gold's market cap. It has and that's not even including all the fiat currencies. All the fiat currencies have a much larger market cap than even gold. So Bitcoin is just a blip on people's radar. So I think it has a lot of upside from here.
One important question an investor can ask themselves once they learn more about Bitcoin is, can I really afford to have absolutely none? You're listening to Get Rich Education. We're talking with Nick Giambruno of the Financial Underground. More when we come back, when now we've talked about the upside of Bitcoin, let's talk about a lot of the criticisms. You're listening to Get Rich Education. I'm your host, Keith Weinhold. For a lender that's a specific expert with income property, you need Ridge Lending Group and MLS 42056. In GRE history, from beginners to veterans, they provided our listeners with more mortgages than anyone. It's where I get my own loans for single-family rentals up to fourplexes. Start your pre-qualification and chat with President Chaley Ridge personally. They'll even customize a plan tailored to you for growing your portfolio. Start at ridgelendinggroup.com. ridgelendinggroup.com. I'll just tell you, for the most passive part of my real estate investing, personally, I put my own dollars with Freedom Family Investments because their funds pay me a stream of regular cash flow, and returns are better than a bank savings account, up to 12%. Their minimums are as low as $25K. You don't even need to be accredited for some of them. It's all backed by real estate, and I kind of love how the tax benefit of doing this can offset capital gains and your W-2 job's income. And they've always given me exactly their stated return, paid on time, so it's steady income, no surprises, while I'm sleeping or just doing the things I love. For a little insider tip, I've invested in their Power Fund. To get going on that, text FAMILY to 66866. Oh, and this isn't a solicitation. If you want to invest where I do, just go ahead and text FAMILY to 66866.
This is Richard Duncan, publisher of Macro Watch. Listen to Get Rich Education with Keith Weinhold, and don't quit your daydream.
You're listening to the show that's created more financial freedom for busy people just like you than nearly any show in the world. This is Get Rich Education. I'm your host, Keith Weinhold. We're talking with the Financial Underground's Nick Giambruno. We're talking about Bitcoin in a dedicated episode for the first time ever here in the history of the show. And when we had a chance to talk to Nick Giambruno, you can see why we wanted to do this. But Nick, a lot of people in the United States are concerned that the U.S. government might do something similar to what China did and just go ahead and shut down Bitcoin and shut down cryptocurrency, because Bitcoin, it basically competes with the U.S. government's product, the dollar. So what are your thoughts when people say, oh, I don't know about that, the government can just shut Bitcoin down?
I'm glad you mentioned China, because the communist government of China is a very powerful government. It's one of the most powerful and maybe arguably the most powerful government in the world. And they've tried many times to ban Bitcoin. You know how it turned out? It was a total failure, because Bitcoin is basically code and it's mathematics. So it's not the easiest thing to ban, even if they wanted to ban it. You're trying to ban mathematics because that's all Bitcoin is. And further, many Bitcoin wallets, and it all works on cryptography, as I said, cryptography is just advanced mathematics. Many Bitcoin wallets have a way to back up your funds, a 12-word phrase. So if you can memorize 12 words, which represents your wallet, you can potentially store billions of dollars just in your head. Now, how are you going to ban that? You can't ban that. It's completely impractical. I always tell people, look at how governments have tried to ban cannabis. Everybody has been able to buy cannabis in any city that they wanted to. And then also other countries have tried to ban U.S. dollars. Argentina tries to ban U.S. dollars. Venezuela tries to ban U.S. dollars. You know what it does? It creates nothing but an underground market. It doesn't extinguish people's desire to have dollars. And I think that's what we have here. I think economic incentives are more powerful than governments. And aside from that, I don't think that's going to happen, because would they approve all these ETFs if they were just going to turn around and ban it? I don't think so. Further, you have lots of court cases. There is established federal court cases that have ruled that computer code, which Bitcoin is just computer code, is equivalent to free speech protected under the First Amendment of the U.S. Constitution. Now, yes, I understand the Constitution is not, people can change it and it's malleable, but still, that complicates any government's desire to ban it. They're going to have to overturn those federal court cases. That's not going to be easy. And even if they do, how are you going to ban something that somebody can just memorize with 12 words written on a piece of paper or in their head? It's completely impractical. And then, of course, you have the example of China, which has banned Bitcoin several times. You know what? Absolutely nothing happened but Bitcoin businesses moving out of China and Bitcoin adoption among regular Chinese people going up. They can hinder businesses and large entities that have big presences. They can hinder that, certainly. But Bitcoin is global. It'll just go where it's treated best. It's like water. It'll just move to wherever it's treated best. I always say this too. So even if the Northern Hemisphere disappeared, let's say there's an all-out nuclear war between Russia and the US that will basically wipe out the Northern Hemisphere. You know what? Bitcoin won't miss a beat in the Southern Hemisphere. It'll still keep going in the Southern Hemisphere because it is decentralized and on over tens of thousands of computers around the world. And if even one of those computers survives, Bitcoin lives on. So I think this is a very, very hard. I wouldn't want to be trying to ban this thing because it's not practical.
Other critics say, all right, if the government can't ban it, well, the government can just then allow it, make it be legal, but they can regulate the heck out of it and they can tax it at really high rates. What are your thoughts there?
Well, the government can do whatever it wants, but I think, yes, it can do all of those things. But I think here's the main point is that Bitcoin is, and we talked about economic incentives. Economic incentives are more powerful than politicians. And I think that's a truism. So as more people become holders of Bitcoin, aware of Bitcoin, I don't think restricting Bitcoin or banning Bitcoin or adding regulations to Bitcoin or adding taxation to it, I don't think that's going to help anybody win an election. Is that going to help anybody win an election? I don't think so. That would be extremely politically unpopular. Yeah, that could happen, It would be bad news for the people who live in that jurisdiction. But you know what? It's not going to kill Bitcoin. It's going to just be a hindrance for the people who live under these Luddite politicians who would do such a thing. But I don't think they're going to do such a thing. They just approved the ETF. I think Bitcoin has reached escape velocity in terms of its political popularity. I don't think anybody is going to win an election by being tough on Bitcoin.
Well, a number of Congress people hold Bitcoin, Cynthia Loomis being one of the more prominent ones. And then you and I talked about the SEC's Spot Bitcoin ETF approval earlier. Well, that's a bit of a de facto stamp of approval on Bitcoin, really, in a sense. And I think another criticism, Nick, in my opinion, this is easy to dispel, but some people will say, well, there are tens of thousands of cryptocurrencies out there. This stuff's just junk. There's something like Pumpcoin that a prominent rapper promotes. I mean, all this stuff is just a bunch of junk when all these cryptocurrencies come out. And I tend to think that's very different than Bitcoin, just like if there's some new stock IPO with zero fundamentals that comes out. I mean, that doesn't diminish blue chippers like Apple or Microsoft at all. So I think of Bitcoin as the first or one of the first cryptocurrencies with a finite supply. So these overnight, fly-by-night new cryptos, I don't think that's really a very good criticism of Bitcoin.
No, I think this is one of the most popular misconceptions is that there is this crypto asset class and that Bitcoin is just one of 20,000 cryptocurrencies. Yeah. And I think this is transparently false. It's like saying, oh, an increase in the pyrite supply is going to, dilute the gold supply or something like this. So it's kind of ridiculous. And the reason behind this is very simple. Bitcoin is the only one that nobody controls. Nobody can change Bitcoin. It's the only one that is like that. From Ethereum, which is number 2 on down, they can be changed. A group of people can get together and change it. And in fact, Ethereum's monetary policy has been changed more often than the Federal Reserve's monetary policy. It's just instead of the FOMC getting together and deciding what we should do with the money supply, it's a group of Ethereum developers and insiders that get together and change it. And the same thing is true of every other cryptocurrency. So that's the very defining feature of Bitcoin is that nobody can change it. That's what makes it interesting. If somebody could change Bitcoin, it wouldn't be interesting. And we don't need to get into the weeds of that, but it's needless to say, Bitcoin is the only one where the supply has credibility. We all know the Bitcoin supply is 21 million. Nobody can do anything to change that. What is the Bitcoin supply going to be in 5 years? I can tell you with precision what it will be in 5 years. I can tell you with precision what it'll be in 10 years. Can you tell me what the Ethereum supply is going to be in 5 years? Can you tell me what the Ethereum supply is going to be in 10 years? Nope. Can you tell me what any cryptocurrency aside from Bitcoin supply is going to be in 5 years? No, you can't, because it depends on how the developers are going to change it. So it's quite ridiculous to lump these two things together. They're entirely separate. Crypto is a cesspool, quite frankly. Bitcoin is the real innovation.
An immutable protocol, as they call it. Nick, I think one criticism is to pull back. We all know that money is 3 things. It's a store of value, it's a medium of exchange, and it's a unit of account. And a lot of people say, I don't think Bitcoin can be a legitimate currency because all people do is store it. So it might meet the store of value criterion of those 3, but I don't know about its legitimacy as a currency. Does that matter? I mean, people kind of use gold as a store of value, but not a currency. What are your thoughts?
Yes, it does matter, and it's a good question. The answer is Bitcoin is not an established money. Take gold, for example. Gold's been around for thousands of years. It is an established form of money. Bitcoin is an emerging form of money. It's a very big distinction. So I personally think the way this will go, and people disagree, but I think just logically, if you look at it, yes, store of value comes first. Why? Because once people store their value in Bitcoin, the monetary network of people who will be willing to exchange that Bitcoin for something else grows. And you can't have one before the other in terms of nobody's going to exchange Bitcoin if they're not already storing Bitcoin. So the more people that store Bitcoin have it available to exchange it for other people, it's like a network effect, any kind of network effect. It's a monetary network effect. And that takes time to build. Further, Bitcoin-related misunderstanding is you kind of view Bitcoin in a different lens than just paying for a cup of coffee, because that's really not what it's made for. The Bitcoin network has a hard limit on the number of transactions that it can process every day in order to keep it decentralized, because if it processed everybody's coffee transaction, you'd need huge data centers to run the Bitcoin software. The matter is that the Bitcoin software needs to be decentralized. So right now, anybody who has an average laptop an average Raspberry Pi can run Bitcoin. That is very important for its decentralization. And if you were putting everybody's retail transaction on the Bitcoin blockchain, it would be impossible. You'd need large data centers. Now, does that mean Bitcoin can't scale to become a medium of exchange? Absolutely not. You have to just think of Bitcoin. What does a Bitcoin transaction represent? It represents final international settlement and clearance. So it's more akin to an international wire transfer. You wouldn't pay for a cup of coffee from a Swiss bank account to Starbucks in New York. That's basically what you're talking about. What you do is you build layers. There are different layers that are built on top of that bedrock, which is the Bitcoin network that is immutable, unchangeable. And then you build transaction networks on top of that. So what we have with Bitcoin, the most prominent one right now is called the Lightning Network, which is another network that's built on top of Bitcoin that is really more suitable for smaller day-to-day coffee transactions. You could actually send about 1/32 of a penny over Lightning. So you can do all sorts of micro transactions. Very interesting. So that's akin to, like a credit card. A credit card is kind of like a layer 2 network that's built on top of central banks, which do international clearing and settling. And credit cards are built on top of that. And you can think of the same kind of solutions that are going to be built on Bitcoin. You're going to have different layers for different applications. And in terms of these medium of exchange and transaction network in Bitcoin, it's the Lightning Network, and it's very exciting to use.
Yeah, the Lightning Network, it's been around for a while. It's been getting more adoption to help promote payments through Bitcoin. Being a real estate investing show here, oftentimes our listeners are interested in buying a property that will produce income from a tenant that's in that property. Can Bitcoin produce income?
Bitcoin itself cannot produce income because it's just simply money. It's simply an asset in the same sense that gold doesn't produce income. If you want to earn income from Bitcoin, invest in Bitcoin-related companies and Bitcoin-related businesses that pay dividends. There are some, and there is going to be many more. There are Bitcoin mining companies. These are companies I specialize in covering in my financial research. They're relatively new. They don't pay dividends yet, but there are several that are looking to establish dividends. You can also lend your Bitcoin. I mean, that's not Bitcoin giving you a yield. That's you earning a yield from lending your Bitcoin. I would caution you because there's been a lot of these kinds of Bitcoin lending services that have gone bankrupt. BlockFi, Celsius. So whenever I hear about Bitcoin yields, I caution people to be not just vigilant, be double vigilant of how you would normally be, because there's been so many scams in this area and bad companies that have gone bankrupt, taking advantage of people looking to earn a yield on their Bitcoin. It's really a nascent industry. And you know what? Look at Bitcoin's compounded annual growth rate over any period of time, 4 years. You don't need a yield. It's going up if the trends continue. And I always tell people, if you're going to invest in Bitcoin, have at least a 4-year time horizon, because that's a long time horizon. But the reason is because that gets you through one halving cycle. These halving cycles go every 4 years. It's almost impossible. There's maybe a couple of instances, couple of days where the Bitcoin price wasn't higher than it was 4 years ago. So I always tell people, have a 4-year time horizon when you're dealing with Bitcoin. And when you look at the returns that could be possible, and I think the past performance doesn't guarantee anything in the future. But I think that being said, we can expect this cycle to be similar to the other cycles. When you see that kind of potential, it should really make you not interested in these yield products.
You mentioned a couple of bankrupt crypto exchanges there, BlockFi and Celsius. I got caught up in some of that. Now I keep all of mine on a hard wallet, because really what these exchanges do is they re-centralize something that's supposed to be decentralized, like Bitcoin, and it gives Bitcoin a really bad name. Nick, I had some people reach out to me when FTX imploded, and people said, this proves that Bitcoin is a scam. And I had to gently explain to people, whoa. Just because Wells Fargo or Chase fails, we didn't say the dollar failed. It wasn't a failure in Bitcoin. It was a failure in these exchanges.
Oh, yes. This has been going on for a long time. And before FTX, there's Mt. Gox. There's a lot of these things. So I think the underlying lesson here in all of these examples is that don't trust third parties. And with Bitcoin, you don't need to trust third parties, because if you can learn to custody your own Bitcoin, you are totally responsible, totally in control of your destiny. You don't have to worry about one of these Bitcoin companies going bankrupt because you hold it and only you hold it. And I think that's what makes it special.
Nick, this has been a great chat, and I think a really good Bitcoin 101 for a person that still doesn't understand very much about it. And you help people understand Bitcoin, and you do an awful lot of other things, including informing people about global trends and macroeconomics. So if someone wants to connect with you and learn more from you, what's the best way for them to do that?
The best place is financialunderground.com. I have a really helpful Bitcoin guide that shows people how to use it in the most sovereign and the most private ways possible. And I keep that guide up to date with the current best practices because these things change very frequently, like what is the best wallet, what is the best hardware wallet, and so forth. So I keep this guide alive with the best current practices. I think that would be a big help for people. Could definitely save them many, many hours of time by simply just identifying today's best practices. So I think that would be very helpful. You can find all that at financialunderground.com.
Nick Giambruno, it's been super informative. Thanks so much for coming on to the show.
Thank you, Keith. Great to be with you.
Another Bitcoin criticism is its energy use. Oh, look at all the electricity that mining consumes. What a waste. But the more you learn, you find that Bitcoin miners, they often use stranded energy sources that might not get used otherwise. In fact, miners have an economic incentive to use stranded and low-cost energy. Volatility in Bitcoin's price has been a real problem if you want to use it as a currency. The price for one Bitcoin peaked at almost $70,000 in late 2021, and just a year later, it was under $16K. And now the price has swelled up a lot again from that recent low. In any case, if you choose to own Bitcoin or any other crypto, please store it on a cold wallet for security. It's a small device. It's about 3 times the size of a thumb drive. It looks like a thumb drive, and there is a learning curve that you have to meet in order to use one. I don't own much gold or Bitcoin, just a little. They both have their merits and risks, like we've discussed. I'm a real estate guy. Even most gold and Bitcoin proponents that I've talked with seem to agree with me that real estate is the proven wealth builder. I'm not sure if we'll ever devote another episode to Bitcoin here. I hope that today's episode at least equipped you to ask better questions in case you want to know more about it. Today's episode had a more international than usual feel. Bitcoin has no boundaries. I'm in Ecuador, and our guest Nick joined us from Argentina today. I'll be back in the U.S. next week when I have some really important real estate trends to tell you about. Until then, I'm Keith Weinhold. Don't quit your daydream.
Nothing on this show should be considered specific, personal, or professional advice. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice. Opinions of guests are their own. Information is not guaranteed. All investment strategies have the potential for profit or loss. The host is operating on behalf of Get Rich Education, LLC exclusively.
The preceding program was brought to you by your home for wealth building, GetRichEducation.com.